So now, without further delay, let's begin our event, sponsored by MajescoMastek and hosted by Insurance Networking News. I'd like to introduce your moderator for today, and that is Era Tremblay. Era, you have the floor.
All right, thanks very much, and thanks very much to you out there for being with us today for our web seminar, The Future of Insurance Billing. As you just heard, my name is Era Tremblay. I'm founder of Era Tremblay, the tech consultants, widely known and a highly experienced consultant, journalist, and speaker in the technology field, notably for insurance and financial services. I was formerly senior technology editor for National Underwriter, and I'm currently featured blogger for Insurance Networking News. Well, ladies and gentlemen, in an era where margins are thin and investment profits are down, every area of an insurer's operations are fair game for scrutiny in terms of value and profitability. Obviously, billing practices and operations are a key area of concern, not only because they involve money, but because they're customer-facing functions, and retaining customers is extremely important in our current economic environment. So today, we're going to examine the current state of insurance billing technology, the challenges we face, how carriers are meeting those challenges, and what the future will look like. Joining me today, Martina Conlon. Martina is a principal in Novarica's insurance practice focused on applications, data architecture, and IT planning for the property, casualty, and healthcare markets. Ms. Conlon recently served as Senior Manager of Enterprise Technology for Arbella Insurance, where she was responsible for core application development, business intelligence, and the agent and consumer web presence. Also with us today, Anil Chitale is Head of Product Development at MajescoMastek for its P&C division. He was the co-founder of STG and was a principal architect of the STG suite of products. Anil has played a variety of roles over the past 20 years in the areas of product development, business development, strategic initiatives, and client services. Well, before we get to our panel, let me remind you that we do encourage you to ask questions at any time during our presentation. And in order to do that, just click on the Q&A pane, type your question in the type of question for the presenter field, then click the Ask button. Use your scroll button to scroll to your answer if necessary. All right, ladies and gentlemen, let's get down to our speakers, our first of whom is Martina Conlon. Martina, the floor is yours.
Thank you, Ara. As Ara mentioned, my name is Martina Conlon, and I'm a principal with the insurance practice at Novarica. To tell you a little bit about Novarica, we are a research and advisory firm that focuses on insurance technology. We publish research on business and technology trends and best practices in insurance. We do research on peer group behaviors for carriers around budgets, metrics, and technology approaches. And we do vendor information and assessment research on the solutions available in the vendor marketplace. We provide consulting services to carriers and vendors for vendor selection, benchmarking, and market research. And we manage the Novarica Insurance Technology Research Council, which is a moderated community of over 250 IT executives that participate in our research and attend knowledge-sharing events that we host in a vendor-free environment. We're a division of Novantis, which is a financial services consultancy out of New York. So today we're going to talk about billing, and we're going to start with overall carrier challenges and priorities for 2011. We'll talk about where billing falls in the priority list, what challenges carriers are encountering today with billing, the strategic capabilities and features that are out there, especially in modern billing systems. We'll talk a little bit about what carriers are doing based on a survey that is currently going on with Novarica, and I've pulled together a preview of that survey results. We'll talk about the impact from billing system modernization and opportunities around taking advantage of some advanced capabilities in billing and what the impact can be. So in general, looking at the landscape out there in 2011, today's carriers are dealing with the environment where everything is up except for revenues. They're finding customer service expectations are higher than ever, increased competition due to the fact that our industry is well capitalized, and we have capacity to address a large number of insurance risks. We have flat growth, which is maintaining our soft market. So we do have increased competition. We also have increased regulatory pressure around the fact that, the events of 2008 and 2009 but also a big fear of the type of regulation that's occurring in the healthcare insurance industry spilling over into the P&C and life industry. The pace of change is faster than any other time in history, and organizations today have to be agile to respond to needs in business change that has to be done quickly. And finally, domestic market growth is flat or increasing very slightly. We have an estimated 3% gross domestic product growth over the next few years, so there isn't going to be a lot of new business or growth in the insurance available out there. In response to this, the carriers are focusing on the basics. Most of their top business capabilities that they're focusing on are around growth and retention. We see here from a 2010 survey for the top priorities for 2011 by insurers that distributor ease of business, customer ease of business, and reduced operating expenses are the priorities for 2011. When we look at the core systems that this impacts, I'd like to take a minute to review the Novarica core systems map before we talk about what systems priorities they have. The core systems map is depicts the categories and the types of systems that are typically required in the insurance enterprise. As you see, the core systems are in blue in the middle, and policy is typically the most core system within the insurance enterprise. Other core systems include the claims system and the billing system, and ancillary systems surround these core systems to provide functions to distributors or common functions such as document management, workflow, and business intelligence. So when we look at that core systems map with the priorities that we have for 2011 on the business side in terms of driving ease of business for distributors and consumers, we see that the top priorities for 2011 for projects really are focused around policy admin and agent portal. For the past few years, policy admin has been a focus for most carriers in the U.S. And we see that billing systems are pretty far down the list. However, we see that about 10% of mid-sized carriers, both in life and P&C, are prioritizing billing. Because even though billing may be a lower priority than policy and agent portals, it is still an extremely important business process. So when we look at billing, we understand that although it's relatively low on the priority list, it's an important business process because it's a customer service issue. It's not purely a financial issue. Recent studies by Analyst groups have shown that consumers consider it a customer service point because it is one of the most frequent touch points with your best customers. And the bar has been raised by GEICO and Progressive and a lot of the large carriers, but additionally, that bar has been raised by Amazon and Bank of America and industries outside of insurance. Consumers expect self-service capabilities online. They expect mobile capabilities. There's an increasing demand for alternative payment types and increasing demand for e-billing in a number of different channels. What billing provides you with is the opportunity to fulfill a brand promise for convenience and trust, and the expectation is that you're going to get it right. However, it also provides you with the opportunity to compromise your brand through poor service or inaccurate data. So billing really today is more of a customer service issue rather than a financial issue. So what are carriers finding the challenges to be with billing and billing systems today? Time to market and flexibility and providing flexible billing and payment options continues to be a challenge and priority, especially for those that are running older systems. Inefficient or manual processes, for example, for underpayments and overpayments. Poor customer service due to limitations of older billing systems, for example, technology limitations that don't allow you to service multiple channels such as mobile or the web, or lack of real-time updates and understanding of the account status because you have a batch billing system, that it takes some complexity in understanding the true status of an account or a bill because you have to understand what cycle that particular bill is on, what the grace period is that falls between, and things like that that are derived around a batch billing system. Inaccurate or unbalanced data, we'll find that that isn't as much of an issue nowadays as it has been in the past. but also premium leakage due to billing system limitations such as not being able to take advantage of cancellation on equity dates. So what are the top billing challenges based on what carriers are saying today? Currently, Novarica has a survey out there. We introduced it about a week ago, so I pulled some data to show some interim results. And what we have here is a representation of 51 carriers, both life and P&C, and what they consider their top billing challenges. The blue area on the left shows areas of good performance, where the colors on the right show areas for improvement. And as we can see here, the carriers today feel that they're doing a good job with the accuracy of the billing system, controlling premium leakage, and providing somewhat flexible options to their to their business constituents and policyholders. The areas that they reported that they need improvement or they're currently working on improving are really focused around time to market. So they can offer these flexible options. However, the time to market is not adequate for providing these options. Base customer service capabilities are in need of improvement based on their billing system limitations, and to some degree, the level of automation that they're providing and utilizing workflow and automated rules invocation. And why are they experiencing these challenges? Perhaps it may be related to their billing system in some cases. So we asked them what types of billing systems are in place. And pleasantly surprisingly, a large, over 50% have only one billing system in place. They're mostly older. There are very few that have a modern single billing system in place, but there are quite a few, over 50%, that have just one billing system. Only, as I mentioned, only 10% or less run newer systems, and those that have multiple systems ranged anywhere in the count from two billing systems to a high of 9 billing systems, with the mean being around 4. So in looking at modern systems and the capabilities that they can provide, let's talk a little bit about the features that you find in these systems. Most of these modern systems provide flexible invoice options with direct billing directly to the policyholder, agency bill, supporting both account current and statement bill to the agency, account or list bill, which is putting multiple policies on one invoice or one account, third-party bill, which includes mortgagee bill, which is billing a policy to a third party, and split or multi-payer bill, where you have one policy that is billed to multiple payers. And a good example of that would be a personal package where home and auto coverage is included in the same policy, and the auto is billed to the policyholder, where the home is billed to the mortgagee. Most modern billing systems support all of these options and provide you with the ability to quickly offer these different options. Flexible configurable payment plans that can be configured by business analysts in terms of 4-pay, 6-pay, down payment requirements, fees, things like that, and payment types that are accepted. Equity cancellation support is available in many of these systems, allowing you to cancel a policy when you come to the equity date, rather than having to do it when they're just past due, if they do have an account balance. And that allows you to limit your premium leakage and take advantage in extending coverage as long as possible and getting that premium. Automated rules for invoicing, payment application, disbursements, writing off and carrying forward overpayments and underpayments, so that individuals and manual processes aren't required for allocating overpayments, underpayments, and all of these exceptions. Real-time calculations, scheduling, recalculating while you're on the phone with the policyholder. If they choose to move from a 4-pay to a 6-pay or change their types of payments, doing that in real time and not having to wait for the next batch schedule in order to recalculate the payment amounts or tell them their new payment schedule. Support for commission calculations and payments is very common now in billing systems. Some have commission modules, others don't, but it is becoming more common. And support for collection activities and interfaces, and automating the interfaces with the collection agencies is becoming more common also. So during the survey that we're currently conducting, we put a list of features out there and tried to get an understanding of what was in place now and what was not in place and what was planned. So we have a lot of features listed here. I won't go through all of them. If anybody is interested in these slides, will be made available by email, and I'll provide information later on that. But there are a lot of these modern features in place with the legacy systems that are out there. For example, if we start at the bottom and we look at account bill, over 50% of carriers who participated in this survey responded that they have account bill in place, that they are billing multiple policies on one bill to one account. We also found that most of the carriers are providing credit card payments for both down payments and installments. We also found that automated rules and workflow are fairly commonplace in the existing systems, whether it's older technology or newer technology, that they are automating rules for processing exceptions and things like that, and that PCI compliance was more common. How they're getting that PCI compliance will be different based on the carrier. But PCI compliance, over 50%, almost 50% rather, reported that they have a PCI compliant environment. Less than half provide split bill. Only about 25% have split bill in place right now. Only 40% have EB, electronic bill presentment and payment, in place on the internet. Even fewer, only 20% provide electronic documents via email for those purposes. Very few offer mobile support, SMS and text support for bill presentment and payment, or equity cancellation. Where we see they're focusing is on those particular areas that I just mentioned. Electronic bill presentment and payment is a major priority for many carriers. As you can see in these charts, the area in yellow is what is planned, and mobile EBPP is one of the largest bars there, from both EBPP and mobile EBPP. And also rule configuration and further leveraging workflow is a priority and plan for many carriers today. When we looked at the features that have already been put in place, we asked the survey participants for their feedback on the impact of these features. So, great, you put account bill in, but did it make any difference? And was the feedback very positive, somewhat positive, neutral, or negative? And I don't have the results of that survey in a lot of detail here, but what I did do is I put stars next to the features that had high positive impact. So these are the experiences of carriers who have introduced these features in the last 3 years and what they consider the business impact to be. So as we can see here, account bill was considered significantly positive impact. Those who have implemented split bill, EBPP on self-service and web portal, credit cards, down payments and installments, equity cancellation, automated rules and workflow, and using configuration tools for BAs to set up payment plans and rules and things like that. So there are a lot of features that have provided significant positive impact. So when we look at implementing new modern billing systems, we see that there are quantitative and qualitative benefits from a billing system modernization. And they tend to be around improved, and they address the challenges that were indicated earlier. Improved time to market for new products, improved customer service and satisfaction levels, operational efficiency, improved consistency in process and control over that process, which is increasingly important as regulation occurs. More personalized customer service in the fact that there's better access to complete information and up-to-date information. Improved cash management in some cases in the fact that you can do equity cancellations, write off, or roll forward very easily. Better identification of management of delinquencies, clear audit trail of activities in your billing systems. And with easier to use billing systems, it's typically easier to train employees, and better data is available for BI environments or data warehouses in a more consistent format. So I'd like to take a few minutes to talk about opportunities in billing and what and the things that carriers aren't consistently doing right now where there are big opportunities to make a big difference. The first opportunity really is to take advantage of the basic capabilities that we've discussed. You know, more than half of the carriers out there don't have electronic bill presentment or electronic. Most actually have online payments, but electronic bill presentment is still not there for many, many carriers. It will, based on your line of business, your requirements may differ, and the effectiveness and impact may differ. But electronic bill presentment is somewhat low-hanging fruit that can have big impact on customer service and cost effectiveness. Paperless billing, truly going to paperless versus with your agents and your consumers if possible, and we'll go through some case studies on that. Credit cards for installment payments, big positive impact reported by our survey participants. Equity cancellation, automated workflow rules, and account bill. Another opportunity in billing, I mentioned e-billing and e-delivery. This is a case study from a report that we published in Q4 of 2010 called Cool Capabilities. And what we try and do in that report is present interesting business capabilities that carriers have implemented and really discussing whether it was easy or difficult and what the impact has been. This case study is a U.S. personal lines carrier. What they implemented is a customer bill presentment and payment solution using secure PDF invoices. So they don't have a web portal for their policyholders. Instead, they send their policyholders a PDF bill that has billing information and a payment stub. It's a scripted PDF so that, and it's also password protected. When the PDF arrives in the email, and it's accessible from any device that will support email and PDF documents, they open up their PDF, enter in their password, review their bill, go to the payment stub, and then enter their payment information on the payment stub. It's a scripted PDF, so that the PDF actually does a secure transaction to pay from the PDF. So there's no reason to log on to a website in order to do online payments. What they also did was when new business was written, they automatically placed people into the paperless option, and they have them opt out of paperless, which is the reverse of what typical carriers do. By the end of Q3 2010, almost 50% of all new business was distributed electronically, and that has only improved since then. The customer feedback has been excellent, and their costs have significantly reduced, where previously it was $16 to $23 per policy for delivery of documents, and it's down to under $1 per recipient for multiple policies attached. It's a relatively inexpensive way to increase cost savings and policyholder service levels, and we consider it a really cool capability, and the fact that it's around billing made it even more interesting to us. Another opportunity in billing is pay-as-you-go. There is increasing interest in usage-based insurance. PayAsYouDrive allows steeper discounts to be offered for the best drivers, and PayAsYouGo, which is typically around workers' comp, offers the better hit rates due to lower down payments and more accurate billing and payments. In both of these, there is some level of either automated reporting or manual reporting of miles driven or your payroll, and that monthly bills are dependent on that reporting feature. And so it will have impact on the policy systems and or billing systems. However, it does introduce a new opportunity in billing in getting more business and offering steeper discounts to the best drivers. Other opportunities in billing, supporting mobile. Producer and consumers' expectations about mobile are higher than ever. Again, everyone in retail space and in financial services is increasing their support for mobile devices, and that is changing expectations. So consumers expect to conduct business in the channel they prefer, and mobile is the channel of choice for the youngest consumers. Interestingly enough, I was speaking with one of my coworkers, and we were talking about our kids, and she mentioned that her 21-year-old daughter uses her cell phone for everything except a phone. So she uses it to browse the web, text, email, everything except make a phone call. And that is the consumer that is coming up the value chain and will be our customers of tomorrow. If we think about what's been going on with Apple and the iPad, Apple has sold $9.5 billion worth of tablets in 1 year. It's the fastest adopted consumer electronic device in history. And the expectations are that it's adopted even faster than adoption of the web. So consumer expectations continue to raise the bar, and this does have impact both on personal and commercial lines, as everyone who's involved in our business is a consumer. What you actually put in place in your business process will differ for commercial versus personal. However, mobile expectations are there across the board. Budgets are low, but projects are plentiful, and if you have a modern back end, mobile projects can be an inexpensive endeavor. They can be low-hanging fruit. And many carriers, especially larger carriers, are implementing mobile capabilities, and even more are focusing on developing their strategy and planned rollout within the next couple of years. I'm having difficulty switching slides. If someone could move to the next slide, please. Thank you. If we could go back one, great. Just a couple of quick examples of mobile applications that involve mobile billing. Mobile Agent Portal typically is a traditional web application that's supported in mobile browser, and it provides inquiry and payment capabilities. Next slide, please. Here's an example of an insurance company, 21st Century, that has delivered an iPhone application that provides a lot of capability to the policyholder, including viewing an ID card, general policy information, filing a claim, but also paying your bill. Another very nice application that I really like looking at is, because it's an interesting commercial lines application, is from FirstGuard. It's a iPhone application that is for truckers. FirstGuard's typical customer is the small business trucker who very often the proprietor is also, and policyholder is also the driver. And it provides quote payments, policy viewing, claims reporting, and some additional mobile candy, which allows innovative social media features so that you can alert and connect users via email and Facebook. It allows you to see where your friends are on an interactive map that can show you what friends or other associates that are driving in the area. It has a speedometer, and it was relatively inexpensive and fast to implement. And the last opportunity I want to talk about within billing is software as a service. Billing has generally become a better candidate for software as a service for a number of reasons. The processes have become more homogeneous and consistent. Systems are fairly standard in their level of functionality that they provide. They have configuration tools that will allow the carrier to differentiate their processes and products without opening up code and changing them, and so that they can be resident off-premises but changed through web-enabled tools. Many carriers are implementing service-oriented architecture strategies, making integration to the cloud much easier and more feasible. The systems have more standard interfaces. We have accord structures that are making integration easier and more consistent. The models for pricing and service levels and security have largely been worked out, although there are concerns by many. However, as the model is proven out, we think that their openness to this model of delivery will increase. Speed to market is a big benefit in the fact that you can stand something up relatively quickly with lower initial investment, and that can be a priority for many customers because it can provide you the opportunity to go into a new market with minimal investment very quickly. The biggest remaining challenge is the lack of flexibility compared to traditional systems, but again, the configuration tools really have increased their capabilities, and this argument is losing steam. So while software as a service isn't for every situation, its appeal really is expected to grow in the next couple of years. And after you implement software as a service, Again, you get all of the benefits of a rapid approach, upfront, limited for upfront investments, reduced IT resource investments, one-stop shopping. You get your hardware, software, services, disaster recovery, help desk from one vendor in one contract. It's rapidly implemented, and there's no worries about architectural fit. You don't have to care that something runs on Oracle versus SQL Server because it's supported by an external organization. There's focus on you can focus your resources on your core competencies, such as billing functionality, not your billing system. And you get a new system without the new staff to go with it. And it really can reduce the risk since the infrastructure and the projects are smaller. So it can reduce the risk of introducing a new system. So in conclusion, the present and future of billing is all about meeting and exceeding customer expectations. And in parallel, maximizing operational efficiencies. But the primary driver within billing is customer expectations and customer service. What is changing is customer expectations around how they're going to do business with us and the technology that we can leverage. Modern billing systems offer features and the technical foundations to meet or exceed these customer expectations, and that carriers that take advantage of these opportunities will be positioned to meet the needs of the consumers today and tomorrow. And billing software as a service does provide the opportunity for carriers large and small to play in the space with reduced upfront investment and rapid implementation. I think at this point I pass it back to Ara, and thank you very much for your time this afternoon.
Okay, thanks so much, Martina, and thanks to you, everybody. Before we get to our next speaker, we do have a question for you in our audience, and that question is this. What is your top challenge related to insurance billing technology? Again, what's your top challenge? We have several choices here, so let me read them quickly. Offering flexible billing and payment options rapidly, inefficient or manual process / insufficient automation, limitations due to batch nature of the system, poor customer service capabilities provided by the billing system, technology limitations for supporting alternate channels, inaccurate or unbalanced billing data, and finally, premium leakage due to billing system limitations such as equity cancellation. I know you have quite a few choices there, but again, the question to you, what is your top challenge related to insurance billing technology? Let me just give it a few more seconds, and okay, let's pull up our results and see where we are. Okay, it looks like most of you say that the biggest challenge is technology limitations for supporting alternate channels, while 22% of you said offering flexible billing and payment options rapidly is a problem. But it's spread out. The responses are spread out, which is kind of interesting, and maybe our speakers will address that. But in any case, let's get to our next speaker, who is Anil Chitale. Anil, the floor is yours.
Thank you, Ara. And thank you, Martina, for a very good overview of the state of the industry and the challenges and opportunities available in the billing space. I'm just going to spend a few minutes talking about, what's the good news and the bad news when it comes to billing. Certainly, the good news first is that there's plenty of opportunities there to improve customer service, customer retention, and as we have seen, even reach out to the extended enterprise and the consumers and the agents that you have through to new channels that are available today. The bad news is, as we have seen, the priority is still not billing. And I think I wanted to spend some time here to see what could be potentially some barriers that are causing the adoption of billing as a strategic initiative among carriers to not materialize, and or what are some of the things that carriers could possibly consider to solve this billing problem. Clearly, there is a desire to introduce flexible payment plans and take advantage of newer technology and channels available. The barrier seems to be somewhere that causes these adoption rates to be not at the level that we would want to see. So if you look at the current state of the billing systems within carriers, you'll find that we looked at the results of the survey that Martina talked about, where we said that more than 50% of the carriers have one billing system. and the remainder have multiple billing systems. So the biggest barrier to moving out of the the biggest barrier to leveraging the ability of the modern billing systems is really that billing is a lot often buried inside a policy administration system in many carriers. The other barrier is that there are multiple policy administration systems and multiple billing systems buried within each one of them. So it really it's a fairly complex undertaking in terms of taking billing into one single consolidated billing system and leveraging all the capabilities that a modern billing platform has to offer today. But once again, the good news is that a lot of the desired wish list of functionalities, features, and capabilities that are on the list that we went through a little while ago are available in today's modern billing systems. The other barrier, of course, is the discretionary budgets, as we're seeing that the discretionary budget is often getting consumed primarily by pass-related initiatives that are primarily focused in new business acquisition and or enabling new distribution channels. But policy servicing and customer servicing, given that a large, the single most frequent touch point with the customer is billing, customer service issue still remains unaddressed. Even the new distribution channels are enabled through investments in the past-related projects. So what is really needed is an ability to, first of all, take an initiative to separate the billing from the past system. What we find is the billing is too tightly coupled to policy administration systems, and that's a single most barrier to carriers not leveraging the capabilities that are available in the modern billing systems. The first and foremost is really to separate the billing as a functionality, billing as a function from that is buried into past administration systems. And the benefits of that can be multifold. Not only can it give you direct impact in terms of better customer service and customer retention, but even the cost of maintaining existing policy administration systems can phenomenally go down if billing functions are taken out of there and deployed in a modern enterprise class billing system. What we also one other area of benefit could be is actually simplification of regulatory requirements. What happens when you have a centralized billing system is that changes required from a regulatory standpoint do not have to be carried out on multiple billing systems or multiple policy administration systems, and so all of that can be centralized into a single enterprise class billing system. So the benefits are really multifold, and not just directly from fulfilling the promise of the brand and reaching to a larger extended enterprise through modern technology and devices, but also in the area of regulatory compliance, also in the area of operating cost of maintaining legacy systems. Once billing by far is the most complex piece of functionality, lot often buried inside a policy administration system, and taking it out into a more mature, robust enterprise class billing platform simplifies the burden of maintenance on legacy policy administration systems as well. One other barrier that we've seen obviously is the discretionary budget aspect, which I talked about, and because very little budget is left out once you undertake a past-related initiative, there is a need for a sort of a financial engineering around ability of a carrier to adopt a billing, a more modern billing system. And to that effect, the good news again is that carriers today have the option to deploy these modern billing platforms in an hosted or an ASP environment. And we're increasingly seeing a lot of interest in that area. So again, that helps us in terms of the ability for a carrier to not necessarily deprive themselves of the benefits of modern billing system because skill sets or technologies are not available within the shop, and or budgets are not available because ASP, the upfront cost for leveraging the modern billing systems on an ASP or a SaaS model can be lower compared to a traditional deployment inside the shop. One other area that we want to, that needs to focus on, carrier needs to focus on, is really consolidating multiple billing systems. Again, the benefits of that are many, many. Once you have a single consolidated billing system, you have consistent processes, and as a result of that, overall customer service improves. You can have bill types that you could not support in the past due to limitations of your legacy platform are eliminated, and you have lower cost of maintaining a billing system because you have maintaining one single billing system that's enterprise class. One other area that I wanted to talk about today was really the opportunity that exists in the billing area in terms of getting a faster return on investment. What we've often seen is that while past implementations by nature are very long-drawn and multi-year initiatives, there's an opportunity to bring in a billing system, a modern billing system, whether it's in a hosted model or whether in a deployed within the shop, and even integrated with your existing platforms to get a faster return on the investment, as opposed to waiting for a full PaaS initiative to be completed before you move on to modernizing your billing application. So there's an opportunity there for a faster return on investment if you approach billing as a strategic initiative, in addition to all the soft benefits that we talked about in terms of customer retention and improved customer service. Clearly, unless you have a modern billing platform, you cannot take advantage of the mature technology that's available out there today in terms of mobile computing and electronic bill payment and presentment options that are there. So the computing power that is available in the consumer's hand today, whether it be through a tablet device or to the mobile through a mobile device, is phenomenal. But the carriers are not able to take advantage of that primarily because billing is not yet standing on its own as an enterprise billing application separate from their PaaS. So there is an opportunity there. Again, once you do that, consolidate multiple billing systems into a single billing system, separate it out of the PaaS system, and possibly even deploy it in an ASP or SaaS model. It opens up a whole ecosystem of applications that are available today that can meet the expectations of the changing demographics and the consumer today, both in terms of the channels through which they want to be serviced and the way in which they want to be serviced. So there's a significant opportunities and benefits of undertaking billing as a strategic initiative to take it out of your PaaS system and hosting it or deploying it as a standalone enterprise billing system within the enterprise. Clearly, modern systems are also easy to integrate with even existing self-service portals that you may already have made investments in. That's a very significant advantage by investing into a modern billing system. And the whole ecosystem of mobile applications that is fast evolving, it becomes accessible once you have a truly modern billing system implemented in your shop. In addition to the consumer, there's also a huge opportunity to improve the service to your agents, which again has payback in terms of customer retention, and whether these can be in the form of alerts and notifications or task lists that can be generated, and tools and capabilities for agents to manage their portfolios and look at a book of business, tools for reconciliation as well as cash application. These are some of the things that come prepackaged with a modern billing system. And again, carriers don't need to invest a whole lot if we were to go with an ASP or SaaS model to leverage some of these capabilities that are available today and benefit from a faster ROI on their investment. I know we're kind of approaching 250, so I'd like to kind of quickly take a simple example of how a billing system has been deployed by the carrier to take advantage of the capabilities that are available today, and then we'll open up the floor for questions. So we have here an example where a carrier, a large-sized Tier 1 carrier that had multiple companies under their umbrella, each using a different PaaS system, a policy administration system, billing system, different geographical locations, and by the book of business was primarily agency bill, and there was an increased competitive pressure to offer direct billing as an option, as well as to offer electronic bill payment and presentment to their customer base. And they implemented a billing solution by separating it out of the PaaS system and through an enterprise class billing system, and they decided to do it in phases. So the ROI kind of was able to be achieved in a span of 8 months from the time they actually took the decision to implement the billing system. There is obviously a much longer process to move the entire book of business, but the two areas that have seen significant impact was that an increase in the adoption rate for direct billing because the capabilities of the modern billing system that they've implemented, and also they were able to significantly improve the customer service experience through the opening up of an electronic bill payment and presentment capabilities. So again, this is something that is an example of how a billing system can be put to can be implemented with a very short cycle for getting an ROI, and also enabling alternate channels as well as alternate billing modes. With that, I will pass back the control to Era. But before I do that, I just wanted to quickly give you a summary of what we really would like carriers to consider here. Is the first and foremost step to leveraging the capabilities of modern billing systems is to decouple billing from PAS and look at it as a strategic initiative, not as something that to be addressed after the PAS related initiative is completed, often in parallel and sometimes even before you actually embark on a PAS initiative. You have an opportunity to consolidate multiple billing systems into a single billing system that's a lot more functionally richer and also has capabilities beyond what your current systems may have. And there are alternate deployment models that are available that make it possible to reap ROI faster and also limit the amount of upfront investment that you need to make to take benefit of the modern systems. Clearly, once you do that, there is a derivative advantage of being able to reach the extended enterprise through applications and tools and functionality that is available through modern devices and through modern media to self-service customers as well as their agents. So these are some of the benefits that you can gain by embarking on this journey. A little bit about MajescoMastek's insurance practice. We're a $160 million publicly listed company. We operate globally and have been providing solutions in the area of billing, distribution management, policy administration, and claims. We have a very active customer base, and so we have solutions that can be offered to address a lot of the challenges that we saw in the survey results just now. There are out-of-the-box capabilities that can address some of the challenges that were listed out there. With that, Era, I would like to hand it back to you for a Q&A session.
Okay, all right. Thanks very much, Anil. And before we indeed get to your questions, ladies and gentlemen, we have a question for you. That's a polling question, a final polling question. And we're asking you, what are your plans for your billing systems in the next 2 years or so? Choices are replace the existing system with a new modern platform, continue to enhance and maintain the existing system. Third choice is surround the existing billing system with new components to extend functionality. Fourth is no plans to change the core billing system. And finally, maybe you have some other plans. So once again, our question for you, ladies and gentlemen, what are your plans for your billing system or systems in the next 2 years? Let me just give you a few more seconds to log up your answers. And okay. All right, we still have answers coming in, so we have a lot of people logging in on this one. All right, let's show our results if we can. And it looks like, well, about a third each are the first three: either replace the existing system, continue to enhance and maintain, or surround it with new components to extend functionality. So great majority of you are on those three, which is again, very interesting. All right, let's get to some of the questions that you have for us. One of the questions we have is, I guess we made some reference to what insurers are doing about PCI compliance, but what are other insurers doing about PCI compliance? What are you guys seeing out there? And Martina, you can go first on that if you like.
Sure. What we're seeing is, is as probably everybody on the phone knows, PCI compliance is payment card information compliance with the regulations that have been published for protecting payment card information, how you store it through, how you transmit it. It involves encryption and secure transmission, and there are a number of things that an organization has to do and put in place if they want to be PCI compliant. Most carriers actually don't attempt to become PCI compliant themselves, but rather they work with payment processing companies that are PCI compliant. So there is an approach where you can have a billing system on site where you don't store the payment card information locally, that you actually store a token that you exchange with a payment processing partner who actually stores all of that information and processes the payments, the credit card payments for the carriers. That is the most typical way of achieving PCI compliance in doing it with that we have seen with a partner.
Okay, interesting. All right. Anil, this one might be for you. The questioner says, your current billing solution can be deployed in 8 months in the cloud. Is that what I'm to understand?
Well, actually, yes. The answer is yes, because the system comes rich with functionality, and we actually have customers that currently use it in a hosted model. So the system is ready to be deployed. What often we'll find on the critical path is the ability to of a carrier to shut off their billing system, billing functionality in their legacy policy administration system, and are deriving feeds out of the billing system. So a lot often the critical path on this is about the interfacing activity between the PAS system and the billing system. The billing system itself, in terms of being able to deploy, is a much shorter time frame, but the overall initiative can be completed in a 6 to 8 months, if it's planned, in a properly interfaced manner.
Okay, interesting. All right. Next question. Do you think electronic billing and mobile support is important for commercial lines?
I will go first, Martina, if you don't mind.
Please do.
Surprisingly, we found that while there is interest in electronic bill payment presentment and mobile computing and modern applications that are on mobile platforms from personal lines carriers, a lot often we found that the commercial lines carriers just have if not more equal amount of interest, and actually some of them have actually taken the step of moving forward and experimenting with it. The case study that I included actually belonged to a commercial lines carrier who deployed an electronic bill payment and presentment as an option to their agents. The other area where carriers find mobile computing, commercial lines carriers find mobile computing to be of interest could be in the area of task management and alerts and notifications. Modern systems have the ability to generate tasks and alerts, whether it be related to cancellations, renewals, delinquencies, or even for that matter, discrepancy reporting. And these can be sent out as alerts and notifications to a mobile device. A lot often what you've seen is in commercial lines, agency billing being a predominant mode of billing. Agents need access to this information. The reconciliation onus being a lot often on them. They need information that is pushed to them in terms of in terms of discrepancies, as well as any alerts that need to be provided about possible cancellations, possible renewal activity, and so on. So again, commercial lines carriers have just about as much to benefit from and interest in exploiting the mobile computing platform.
All right, good, thanks. Let's see if we can get one more question in here. Let's see, our questioner from the audience asks, what is your view on the long-term need of agency billing in the P&C world? Will all go direct?
I can take a pass at that.
Sure.
I think there is an increasing movement towards direct for personal lines and small commercial, and even some mid-size, mid-market commercial. However, I think that there will always be a place for agency bill, especially in large commercial, where that relationship between the agent and the policyholder is really the primary relationship and that drives the business transaction. So I think that there will be reduced utilization of agent bill, and we're seeing that now. However, I think it will always need to be there for certain lines of business and certain categories of business.
All right, interesting. Well, ladies and gentlemen, that brings us to the end of our time for today. I know there were some more questions out there, and hopefully we can get to you on those offline. But meanwhile, we want to thank you for joining us and thank our speakers. And on behalf of MajescoMastek and Insurance Networking News, this is Ara Tremblay, the Tech Consultant, wishing you a pleasant and profitable day.